Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Sales International Limited. Here is your weekly technical analysis of LME 3-month nickel and zinc. I'll start with LME 3-month nickel. Those of you who saw my email and post on Sunday night would know already what the main feature from last week was. We had a trio of weekly key reversals down last week in LME 3-month nickel, zinc and tin. That key reversal down in nickel offset the key reversal up, the daily key reversal up on Thursday 2 weeks ago, and is why we saw prices down with the flatlining medium moving average currently at 17,375 and a short stroke medium moving average currently at 17,320. Now the actual weekly key reversal, I suspect, was a result of the same overhang this market's had since the start of May, when prices at that time rose up and slammed into it. It, in this context, is the congestion from August 2014 between 18,400 and 19,070. This doesn't take away from some of the underlying bullish factors we've seen since the big drop back in March. So we are further below the middle time, currently 16,950 of the big 2017-2018 shallow bullish shift pitch walk. The lower time currently at 16,720 of the October 2020 to March 2021 bullish shift pitch walk as well. And in between the slowly rising long moving average, currently 16,770. Whilst these two pitchforks are in operation, this market will still have the bullish incentive, even if it sometimes looks like it's missing. We just had the recent reverse head and shoulders pattern over May to June looks suspect now, with the market dropping further than the last shoulder. I'm just wondering, apart from the roadblock overhead and the current bullish conditions, what will be the next pattern? LME 3-month zinc. As I've already mentioned in this video, those of you who saw my email and post on Sunday night would know already what the main feature from last week was. A trio of weekly key reversals last week in LME 3-month zinc, nickel and tin, all of them down. In many ways, the action here in zinc was the most profound. You see, I had written back when I made written commentaries in November last year how the bullish incentive was still alive. This was due to, and I quote, shallower bullish shift pitch walk for the same move, that's the early July to early October 2020 move, end of quote. And I added also, so while superficially the market may be topping and looking sideways to a potential move lower, the reality is that the bullish incentive is still alive, though at a less acute angle. It all depends what the market will do with the big old 50% Fibonacci line at 2806. Because there's a lot of support below and also resistance above, end of quote. Since then the market has, overall, moved higher, most recently using the lower time, currently 3013 of this shallow bullish shift pitch walk as a base of support. However, by the middle of last week, prices broke down not only through the lower time, but also down through short medium moving average, currently at 2938, the big May 2020 today uptrend, currently at 2901, and the medium moving average currently 2867. Indeed, the only thing that stopped the market going lower was, and I quote here, the big old 50% Fibonacci level at 2806, because there's a lot of support below and also resistance above, end of quote. It is interesting in all that move down that the key 50% Fibonacci level I pointed out back all those months back in November last year at 2806 has proved to be the stopping ground for last week's big weekly key reversal down move. That also initially ran into this week. The question now is, what's next? Well, the action since the big fall in March looks suspiciously like a bearish bump and run reversal top. It's not perfect, as the trend line for such a move would be down at about 2769 today, just above the slowly rising long moving average, currently at 2749. However, it is not unusual for such a pattern to see some hesitation around this trend line area before seeing a strike for lower levels. Hence, I'm minded to look with favour on this as an idea. It is too early to start placing targets on the downside for such a pattern, but it would be reasonable to look at the 26-25 area as a rough guide. Of course, all this very much depends on the market halting at around the 2806, 50% Fibonacci area before heading down, something it really may or may not do. Finally, I'll deal with targets X1 and X2 on the daily chart. You can see these are from the initial and full target levels for the diamond continuation pattern formed over January to March. Well, the market had already reached target X1 in the 1395 area, and I had previously expressed doubts about the market having the impetus to reach target X2 in the 3215 area. Thus, having more or less fulfilled its primary purpose, I will now retire these two targets. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.